Welcome everybody. I'm Jules Kelly, the Sales and Marketing Manager for SMATS Group. Thank you for all taking the time out of your busy Christmas schedules. We really do appreciate you coming to our webinar tonight because we know it is a frantic time of year. Okay, so the directors of SMATS Group and Griffin Group tonight will discuss an exclusive investment opportunity to become part owners in the future merger of both companies via a convertible note. So now I'd like to introduce our presenters. We have Steve Douglas, the co-founder and executive chairman of SMATS Group. We've also got Greg Devine with us, the founder and managing director of Griffin Group.
Good evening.
And with him as well as Stephen Smith, the chief product and innovation officer at Griffin Group. Welcome, guys.
Well,
I'm going to pass over to Steve, who will commence the presentation.
Yeah, tonight we are going to discuss that convertible note offer. We've had it out there in planning for a long time. We formally launched it a little while ago, but we've been in phases as to where we want to, and we're ready to go to the next phase. And I suppose with all the things we do, with SMATS, we have to start with a little quick disclaimer and just a reminder that we're not here to give you advice. We're just offering this opportunity, and you should just check that. And of course, this convertible note offer is only available to wholesale investors. We will verify that with anybody anyways, but basically it's assets over 2.5 million and income over 250 or a 500,000 placement. So we'll get into it, and I suppose we're really excited about opening up the convertible note as the first stage of the next phase of everything with SMATS and Griffin. We're on a very, very exciting path. We've been able to achieve a lot of things together, and we were just chatting earlier. It's incredibly. It's 10 years now since we started working together, which is phenomenal, and we've developed a very, very strong relationship and have great faith and trust in each other, which is essential in success and certainly one of the cornerstones there. But we've got aspirations, and we've got big aspirations, and we intend those aspirations to get larger. And for that we need capital, and obviously we've been fueling the ship for all these years and got it to a certain point, and we just need more fuel to go even faster, bigger, and better, and and achieve the level of success that we're looking for as a group. So the note's all about getting this ready for that continued expansion and getting us ready for an ultimate listing on the stock exchange. So we'd like to share this mainly with our clients, because they're the people that got us here, and without our clients, there's nothing. And even with our long-term listing strategy, the mission there is to literally have as many SMATS Griffin clients as shareholders as possible, rather than offering it to big institutions and big venture capitalists that really show no level of respect or appreciation. We want to run the company in a way that's extremely ethical and puts client first, and a lot of those investment type categories don't do that. So the more and more participation we have of our clients and our staff and our partners, the stronger the organization we're going to be, the nicer the organization we're going to be, and I think the more sincere and genuine we're going to be. And that's really, really cornerstone to everything that I've tried to do right from day one. And I think probably our biggest asset has been our sincerity, and that's where it's got us to. What we're trying to do with the convertible note is to bring us together. So, again, a 10-year relationship that just keeps moving forward, at a very, very strong pace. But, we've been able to build an incredible array of opportunities for our clients, and, particularly proud of what we've done as a SMATS Griffin Alliance, because it's been done in a period where interest rates were literally nothing. So most of our clients had no real alternative to generate sensible incomes. We've been obviously at SMATS helping people buy property for the last 20, 30 odd years, and that's been extremely successful. And we're still in the property business through our funds management with Griffin, but we're doing it in a different way that's giving higher incomes and rotation rather than just long-term hold. We'll never stop being a long-term hold organization. We love property. We'll always be there to do that. But this is adding another feather, particularly as our clients, like us all, are getting older and need those retirement incomes. It's been a brilliant thing to be able to create the funds management business together, and that's going to be a cornerstone and pillar of what we're doing going forward. I think we're now very, very close to our utopic position, and that was to create an enormous amount of service opportunities, so that we're looking after our clients in the fullest and best way, keeping them in the safest environment and giving them the most opportunity to have the best life that they can. And that's really what we're all about. And we don't want that to change. And that's another reason why we want our clients to be our shareholders rather than a profit-driven institution that says, just make money. We don't want to make money at the expense of others. We want to make, our clients make money and enjoy the ride that brings to the entire organization. And, through our staff participation, through our client participation, and through doing things as they should be done rather than just for the sake of how to make more money. I've never been happy about that. It's probably one of the reasons that I left Ernst and Young right in my early careers. That was too money orientated, and I just wanted to help people, and that's what I'm still doing all these years later. The capital that we're going to do, and we'll talk about what we're going to do with it later, is important. And ironically, when we started this business, we could do things cheaply, but as we got bigger and stronger and more licenses, more offices, more staff, more compliance, the things we want to do are also bigger in nature, and we need this capital to be able to do those things. We want to make sure that we've got the right amount of capital so that we can do it properly, professionally, and in best practice. And that's really where this is all coming from here. We just can't keep the fuel up, as much as we used to in the good old days. So, this is just the stepping stones in towards listing, where we'll take it to a whole nother level again. So, we're excited to give you an early entry opportunity and hope that you can join us with this ride. But I think, at the moment, I would say that we're pretty much, as a combined unit, second to none in terms of what we do offer, the professionalism, the license, the delivery, the outcomes, the client focus. I've been searching high and wide for anyone that's a peer, and I can't find one, but the exciting thing is there's lots of like-minded people that offer services that will complement or enhance what we're doing. So we're still on the hunt for that. Just a quick word of what is GPS. Well, GPS we've set up as a separate entity in preparation for our future listing. So it is there as a potential listed vehicle. So whether we do a IPO, whether we do a backdoor listing, a merge, is still yet to be determined, and that will just depend on the circumstances of the day and the economics of the transaction. But GPS has been set up ready to do that. So, Greg is the head of Griffin and myself as the head of SMATS. We have committed to, we will roll our organizations into GPS. So it literally is just a precursor to that full acquisition of our entities, under the GPS banner with the intention of IPO or list merge. And that's really what it's about. GPS is investing technically in SMATS and Griffin in readiness for that total acquisition later. And hence, your involvement is in the future vehicle that will be listed and active and own the businesses. So we're both committed to that cause, and that's where it's going to be quite exciting. But we'll always be able to maintain each organization's independence, its ethics, and GPS will be the mothership that basically provides the interconnection and the capital and the liquidity of our shareholding to allow things to keep growing in a very, very positive and strong manner. I'll hand over to Greg now, who can give you a little bit of a Griffin intro.
Thanks, Steve. A great summary there, and thanks, Julie, for organising all of this. I appreciate it very much. Griffin was founded back in 2011, which seems such a long time ago now, and set up then as a privately owned boutique family office, private investment group that was focused on development of good quality property. And as we've moved forward on that basis, we've added more and more. We have developed a very interesting little model, which we've stuck to, and we keep sticking to it to now move past 20-odd projects. So each of those is a refinement. Each of those is a new learning curve for us. And each of that, together with SMATS, Griffin, and our clients, we think we've added more and more tweaks to make it better as we move forward. We're very lucky to be based and headquartered in Perth. For those of you who have been here, it's a beautiful place. But over the time, and as we move forward with capital, Griffin has a small team based through Singapore, Melbourne, Brisbane, and Adelaide as well. and that's very much where our projects are orientated. It was very early on that Steve and I spoke about Perth being our home and our area of influence. Having said that, we're now well and truly 50-50 between Perth and other states as well. So I think we've learned good lessons from that. We stick to one thing, and that is specialising in one particular type of investment product, which is based around property. We do have a range of options and opportunities around property now, which has come from the success of our clients, come from different ways to fund projects, and more importantly, come from delivering to clients the opportunity to get above average rate of return from multi-unit residential projects and mixed-use developments from childcare, medical, and particularly townhouse developments. Probably more so, as Steve will touch on a bit further on. All of that can only be done through a licensing structure. And historically, both myself and Steve Smith have come from investment banking backgrounds and from responsible manager asset structures. So the licensing, and back to Steve Douglas's earlier comments, licensing is not a problem. Licensing is an advantage because it gives us the ability to make sure we deliver properly and within the law of the land. And more importantly, we look at licensing as being a very strong plus rather than a negative from that point of view. So we can only deal with wholesale and sophisticated clients, and we look to add a range of investment opportunities through secured investment, through secure private lending, through different types of investments, including equity itself, and also high yield investment structures through our bonds as per we've been working on. So thanks, Steve, for that. I'll move on to the next slide. Just by way of quick summary, for those of you who are aware of Griffin, we have $80 million worth of projects under construction as we speak across the whole of Australia. 230 million worth of new projects that are in planning. Most of those now are coming to or getting to development approval structures, and $120 million worth of new projects in the pipeline that we have secured via options for the future. Obviously not for today, but Australia is in a very interesting position. The downturn in the market has created great opportunity, and Griffin, SMATS and our team of researchers have been able to locate and find some very interesting opportunities throughout Australia for the next 1, 2 and 3 years. So our structure is to deliver new homes and apartments across Australia over the next 2 or 3 years. And I think that is going to be our success. Australia has seen a small downturn in property values on the back of a tremendous increase in property values, and people have been a little negative about that, which has created great opportunity for us to acquire and put our foot on new projects in 2023 and 24. We are just coming to the completion as we move in this last week or so into Christmas for 6 projects being completed in the last 12 months. Those projects total some $77 million worth of outcome from those. And that is between now and the early part of the new year. The paying back, the completion, the full sale of those projects, and the delivery of capital and return back to clients. And as part of that, we have completed 117 sales over this last 12 months across those projects to December 2022. So a busy year, busy years to come, and GPS for us and the opportunity to work with SMATS and other great professionals in the marketplace that want to join us gives us the opportunity to keep growing and developing. Thanks, Steve.
I'll give a quick intro on SMATS. I mean, most of you obviously would know us, and I'll try and tell you some things that you don't know if I can. But it's now we're in our 27th year. It's 28 next year, which is just incredible. We were meant to have a big 25th party, but unfortunately COVID managed to ruin that for us. So I'm still waiting to have the 25th anniversary party. We had a fantastic one on the 20th. But 28 years, we still feel that we're very, very young, very, very energetic, and very, very motivated to keep going. We've got a fantastic team of about 100 people that have part of SMATS, and we're still doing our core, and our core has always been in supporting, people that are investing and interested in Australian property, particularly expatriates, and foreign investors. The migration has been a key element for us, both for repatriation of expatriates and foreigners moving to Australia. We've been building our offices in Australia very strongly in the last few years, and so we're also building a very, very large client base in Australia, which I never really wanted, to be honest, when I went to Singapore back in '95, but it's just turned to be inevitable. So we're very, very happy and excited to be there now. And I moved back to Perth to live in March, this year. So that's going to provide even more impetus for that. I think, when I look at what I've been trying to achieve with SMATS and Raven, my 2IC right-hand man and who I couldn't live without, we've had a mission to do this for ages. We were fortunate enough to get Helen, who became head of our finance. And, we've been building this whole mission of being that full service entity. And that's moved from the tax to the finance, to the property purchases, property management, into the wealth management, into the development in association with Griffin and the funding of that. So I've been obsessed to have this full smorgasbord, and anytime we see an opportunity to add a new dish to the smorgasbord, we do. But the secret is we want to make sure it comes out of that kitchen absolutely delicious, and it's got to be healthy and nutritious and delicious, and that's what we're doing with our financial products. And we keep adding to that, with good people and with good products and good options. And that's exciting, and it's part of what the GPS, activity is all about. The strength of our company has always come from what we've been able to achieve for our clients. And, if you've ever, spoke to me, one of the things you'll know, my sequence of events is always client first, staff second, company third. And that's a belief that I hold dear and will go to my grave with, because at the end of the day, if our clients aren't moving forward, then we don't have a business. I'm obsessed now with multi-generational. We're now having the excitement of dealing with our clients' children, and that makes sense when you think of it. If you've got, as many clients as we have, which is about 10,000 plus, you don't need to go look for strangers. They've all got 1 or 2 kids. So all of a sudden, there's your next 10,000 clients sitting on your doorstep. So, we don't want to ignore our existing clients. They're more important to us than strangers. So we've always worked hard to just keep working for that and doing it. And we just want to keep making sure that we're relevant, innovative, and have high integrity and great results. And that's been, a thing we've done, I think, very, very well, and built to the business growing through referral and word of mouth, which is really where we do. And then I'm obsessed with high tech, and one of our successes are a technology complete empire, which we'll talk about later. But, more importantly, with high touch, we don't want to be, just delivering electronically. We want to have that physical presence, that physical touch. Hence, we do a lot of the webinars. Hence, we've got the offices all around the world. And that network has been, built over a long period of time. And even with COVID, when, probably we could have and should have financially closed some offices, we have no intention to do that. We're committed in those markets. We've ridden out the storm. We've been fortunate enough to be sensible with our costs and our revenues. We've been able to still offer great value to our clients, and we've been able to survive and prosper during these times. And we see that those markets will not change for us. They'll obviously change in the faces. A lot of people are coming in and out, but we see our presence there to be permanent and long lasting. And we wanted to strengthen that. What we have done is we've been building a stronger and stronger presence in Australia, because a lot of our clients have come back, and part of that's because the company is almost 30 years old, and a lot of our clients have been with us for 20, 30 years. And just like myself, you run out of speed overseas and you come back. So we now, for the first time in a long time, we are now actually as many clients in Australia than we have overseas, which is a big change for the SMATS organisation that was at one stage 100% overseas. So that's an exciting future, because that's going to continue to build and grow. And we're committed with that, with some recent office acquisitions in Torquay, Sydney and Brisbane. That's really, really exciting as to where that's going and the people that will join us as a result. Steve, I'm going to pass on to you now. I'll probably rambled off enough about SMATS, and you can give a bit more technical detail on the convertible note.
Thanks, Steve, and good evening, ladies and gentlemen, and thanks for your time tonight. So far, we've heard from Steve and Greg really outline and somewhat humbly outstanding businesses with really long track records of success through different economic cycles. So they're not talking about new ideas, they're not talking about startups, they're not talking about concepts, they're talking about established businesses that are looking to come together in the future, which is really exciting. And I think that's why you're on the webinar tonight, is to find out how you can be part of that. And my role on the webinar is really to explain the detail of how you can join and become part of a super group in the future. So firstly, as you've heard earlier from Steve, the convertible note is for wholesale investors only. If you wish to find out more about the convertible note and understand more about the offer after this webinar, I'd encourage you to contact your Griffin or SMATS representative to request a copy of the information memorandum. And that really goes into a lot of detail about how these companies have come together, about what the issue is and what we're looking to do, how the funds will be deployed, how you can be part of shares in the company in the future, and also the benefits of that and the risks of that as well. That comes along with some other documents. That document suite enables you to be part of the convertible note offer. So a convertible note, just to give some basics around what the offer is, it's what's called a hybrid security. So it's something that starts as something and converts to something else. And in the case of GPS Strategic, it starts off as a loan that pays interest per annum during the period of the loan, and then comes to a conversion event. And at that event, you get to make a choice as a convertible note holder. And you can either choose to hold shares in the company, so your loan converts to equity or shares in that company in GPS Strategic, or you can choose to be repaid your full loan amount and interest, bonus interest at that conversion event. So we do have a minimum investment amount of 100,000 Australian to be part of this offer. And what that will get you is 10 convertible notes, each note having a face value of 10,000 each. So that's the basic sort of parameters and features of the offer. So looking at the next slide. So a common question we've been asked today is then, what is a conversion event? So there's really 4 potentials that we've outlined in the IM of what a conversion event is. So it's potentially an IPO that can occur at any time, really up to 3 years, where the shares in GPS and you'll be brought along to that in an initial public offering on the ASX. It could be a merger or acquisition of GPS with an ASX listed company. It's what Steve referred to as a backdoor listing. It could be a trade sale where someone comes along and purchases GPS and the opportunity to get Griffin and SMATS as part of that, which would be taken along with as well. Or there's an absolute conversion event, which is the 28th of April 2025, which is the maturity date of these convertible notes. So at that point in time, you will need to make an election following that to either convert to shares or be repaid and move on with your funds at that point. Following conversion, GPS Strategic will also become the owner of Griffin and SMATS. So that's the point in time which these 2 companies come together to effectively form a super company with amazing and enormous opportunities. Thanks, Steve. So how does it actually work? So as I mentioned at the start, commences as a loan, and that loan will pay you a rate of interest of 4% per annum, and that'll be paid to you quarterly in arrears. So we're borrowing your money and going to pay you for that money at 4% per annum. As I mentioned, the conversion event in 3 years, which must be by that maturity date, if not one of those other events, will give you a choice. Will you get a time to make a decision and make an election to either convert your loan to shares in GPS, and you receive shares to the value of your loan. Plus, we're also going to give you a bonus amount of shares of 16% per annum for the time you have held those shares. You may choose that GPS Strategic and being a future owner of GPS Strategic is not for you, which may mean you wish to take your loan back. So we can repay your loan as cash. And for having use of your money or your loan for that period of time, we'll also pay you bonus interest of 2% per annum for the time you've held your loan. So we're not saying we're going to take your money, we're also saying we're going to give you something back for the use of your money, plus pay you interest. So just using a case study to demonstrate that further. So let's say after this webinar, you're interested in the offer. You've decided to request an IM, you go through the IM and look at the different features and meet with your Griffin or SMATS representative and decide to proceed in April 2023. You just invest the minimum of 100,000, just makes it easier for me to do the maths essentially. So each year for that time, up until the conversion event, which was decided based on the maturity of the notes, April 2025, you've been paid 4,000 interest Each quarter you've received $1,000. So for 2 years, you receive $4,000. 3 months, up to 3 months before the conversion event, we'll send you an election notice and we'll explain what's happening and give you the ability to make that choice at that point in time. Choice one, you decide to convert to shares in GPS. You believe in the future and you want to be part of that. So firstly, we'll take your 100,000 and convert it to 100,000 shares in GPS. We've known that, and over that period, you've held the loan for 2 years. So we'll give you another 32,000 shares in GPS as well. So over that period, you'll end up holding 132,000 shares in GPS. Or you can elect to get repayment, which means you'll get back your 100,000 plus the $4,000 of bonus interest that I also mentioned. So you'll receive cash back of 104,000 to go about as you will. Otherwise, you're electing to convert to shares in GPS. So finally, another question we commonly get asked is how will the funds be used, which we do go into a great deal of information in the IM, and further Steve and Greg after me are going to go into further as well. So firstly, as we stated in the IM, the first $5 million that we're raising under this note of up to $15 million in total will be fully deployed evenly to SMATS and Griffin. That's been done under what we've already put in place, a loan. So both companies have entered a loan with GPS Strategic, and a charge, which is a form of security, has been taken by GPS Strategic over both those companies. So under the loan deed, SMATS and Griffin are already paying on interest on the amounts they borrowed to date of 6% per annum. So it's more than the amount that we're paying investors of 4%. The reason being then that we can meet the operational costs of the company means that the company is already starting to perform and be profitable. Once we go above 5 million, there's the opportunity to make strategic acquisitions. Those strategic acquisitions will be a decision by Steve and Greg that meet the values and alignment of the two companies coming together, where they may go out and acquire an interest or full interest of external companies that provide strategic value to both organisations. There'll also be a small amount there to meet any redemption requests as well. So now I'll hand back to Steve to go into more detail about how those money's going to be used.
Thanks, Stephen. Well, we've had the GPS now for a little while, but we've been doing it in phases because obviously we don't want to raise money just for the sake of raising money. It's important that we, tie that into what our activities are. So the first small raising we did, went towards, helping us with our offices. Again, one of the things you may not know about SMATS is I'm obsessed with owning our offices. I'm very, very old fashioned in that. I'm not a big fan of leasing, so we own most of our offices. I think, we own 3 offices in Perth. We own 2 now in Sydney, 1 in Melbourne, being the Torquay office, and also 1 up in Brisbane. And we also own the Dubai office. I'm, in negotiation to perhaps buy the Singapore office, although that's a huge amount of coin there. So we're just working on that. And I'd love to own Hong Kong, but it's just crazy. And I think it's a bit too risky and dangerous. So I'll just have to see how that goes. But any chance we get, we do acquire offices. So, that's been something that we continue to do into the future. But we're pretty well set on that infrastructure now, which is pretty fantastic. We bought the Australian Property Investor magazine a few years ago, and that's been a fantastic little thing. And that was, again, a 25-year-old business, very large, investor base. We haven't integrated that fully into SMATS yet because we wanted to keep its editorial independence and just keep building it. So that's been good. Better Way was a marketing business we bought into, and then recently we've used some of the funds to acquire 347 Darling, which is a new license that we took out, and that one is unlike our current SMATS consortium license in collaboration with Griffin. This one is for more financial instruments. So we've just launched our first share fund. I've been helping people buy shares and understand shares for ages. We now have launched what we call the SMATS Protected Yield Fund. And that's our first foray into offering, our clients to be able to, acquire shares through us. And we did that largely because we do so much, tax planning these days where we encourage people to buy shares and they're too scared to do it. They said, oh, couldn't we just give it to you? And up until now, we couldn't do that. I'm very pleased to say we only launched that fund around about, 6-7 weeks ago, and we're already up 6-7%. So that's pretty fantastic. At a time where everyone else was saying, oh my God, the share market shot to pieces, I didn't believe that. There was incredible value in the market, and we'll be a value investor in there. And we look forward to that being a pretty significant part of our business. And again, part of that whole smorgasbord. And we've also just acquired an interest in a business called the Property Advisory, which is our main first foray into the commercial sphere. So Property Advisory is a significant property management business with a significant investor base that have been buying into commercial properties over a number of years. And that gives us, again, another piece on the table, which is the commercial property. A lot of our clients have wanted it. It's a very specialized field that can be fairly high risk. So it was very important to have the right partner, and very much in the way we work with Griffin, where development itself is very high risk. But if you've got the right partner and the right funding, the risk gets mitigated significantly. So we're now feeling comfortable to go in that commercial space, and very soon we'll be launching the commercial property fund. So we'll have the clients will have the opportunity to do the residential developments, they'll have the commercial property shares, and we'll have a number of different funds that we're offering for the first mortgage and a few things. So that's all pretty excited. So we've been pretty shrewd with our acquisitions. We've bought sensible things, but the main thing we're buying is people, because a business itself, just to buy it for the sake of expansion, we've never been a big fan of that. But with these businesses, we buy the people that come with it more than we care about the businesses, because that's what made it successful. We want that to be a long-term part of it. In terms of the future, there's lots of things I want to do, and again, the shopping list is very large, and unfortunately, all the cheap things I've already done. So now it's the big stuff that comes along. So one of the big things we're working on at the moment, and have been for the last 16 to 18 months, is the first mortgage fund. I'm obsessed with this one because, particularly our foreign investor clients haven't been able to get, cost-effective finance for the last 3 or 4 years. And many of them are being gouged heavily by the big banks. So we're looking to set up our own fund to lend them the money, at a reasonable cost, so that they can at least get out of that high-cost alternative. But that's going to take, tens of millions of dollars. So, we want to do that properly, and, hence the first mortgage fund will be set up to feed that lending business. We're looking at the moment at doing a strategic acquisition and just waiting for the final outcome. It's probably a 50-50, hopefully a bit more than 50-50 of a potential listed vehicle for us, which is, our target. And the first phase of that is potentially taking their finance business out. SMATS, obviously, finance is at the cornerstone, and Helen was recently, awarded Australia's best finance broker, which was an incredible honor, and she's quite chuffed at that and excited. But she's, we're going to leverage off that, and we're looking at taking this business on, which will bring, again, not just strategic alliance, not just potential listing partner, but it also brings a very strong finance team to build our business and give it that stronger presence. Complete Empire, which is our software system that we built in-house and is really quite amazing. It's been a lifelong challenge of mine and excitement to build it. It's really starting to get traction. I've just got back from Sydney from a prop tech show, and we're starting to pick up quite a number of users now. And that's something that we are really, really excited to share with the world, and we think it's got an enormous amount of upside. And then we've also just launched the Development Equity Fund, where we've had great success with Griffin in regards to providing development finance and funding on a loan basis. But one of the critical elements of safety and success there is making sure there's sufficient equity in each deal. If it's got enough equity, it can survive any sort of challenge. And so, given that our clients have had such great success over a long period of time, there's trust and relationship there. And so we're looking to shift some of that debt capital into equity, and that's going to allow everybody to continue to enjoy the fruits of our labor, provide the stability and safety of having adequate equity. Because if you look at why most businesses fail, it's lack of capital, and hence why we're doing the GPS. We need enough capital in our entities to work, and we also need enough equity in the projects to make sure that they're safe. And that's one of the things we're looking to do. So we're looking at how do we raise equity to go into that. So, there's lots of things going on. I could ramble on for days, and, one of the things I hate is having conversations, because every time I have another conversation, I have another few ideas. So these days I'm trying to be a hermit and trying to keep myself hidden away so I don't have too many ideas. But believe you me, I've got, a head that explodes on a regular basis. So, we're looking forward to that. And that's going to make us a very dynamic company, a very exciting company, and a very diverse company that's going to give a lot of opportunities for clients predominantly, staff, which will be a very exciting and interesting environment, and shareholders that will be able to benefit from these things, because we're playing with the big boys now and we're going to have some big boy success. Greg, I'll pass to you.
Thank you, Steve. Appreciate that. Look, I will just cover off on what's relevant to Griffin. Steve's touched on a range of things that we are doing together and the reasons why we're doing that. One in particular, which we're very much enjoying, is the complete empire structure, which is really the amalgamation of lots of different parts of the business. And although Steve is keen for us to push quicker, we are moving at our pace and at our speed. And it is an exceptional piece of software that we've embraced as part of our overall strategy, which of course will make Griffin much more successful as well. In the sense of capital and why we need capital, and outside of our own base of capital itself, we've appointed a new director based in Singapore, based around finance. So part of the finance is that each of our projects, as you would be aware if you're involved in Griffin projects, have part of first mortgage, part of secure private lending, and part of equity and or a mixture of equity and pref equity as well. But one of the key things with the capital that's coming through Asia has been very much groups that have wanted to lend us capital for first mortgage, which is much larger than the normal access to capital that we would normally be able to get at. And we've been very, very successful in Singapore finding first mortgage capital for our projects, and have appointed a party there to help us with that. We're only able to work with wholesale clients, and hence the push for us in Hong Kong, Singapore and Japan for that type of capital is also very important, and we're having some great successes in that area. So that's a key push. All of that requires capital to support people and to grow and develop in those spaces outside of the relationship with SMATS and other groups that allow us to get secure private lending and equity. So first mortgage funding, getting it at a good rate, getting it on the terms we want, and getting it for our projects that are boutique, inner city and exceptional has been a key focus for us. Part of the discussion for Griffin is around licensing, and our background is very much licensing. And both Steve Smith and myself have worked very closely with a retail-based group called Primary Securities, of which they require further capital to grow and develop. And we want to be able to access retail. And by that, I need to touch on that we're not chasing the mums and dads of retail. We're chasing the people that Steve alluded to that are both in Australia and overseas, that historically don't quite fit wholesale, but are going to be wholesale at a point of time in the future. And we have an absolute obligation to help those people get there. We can't normally deal with them if they're not wholesale, but under the new primary structure and their need for capital, and of course they're having their own amount of growth and strategic funds under management, we're looking to take a strategic placement in that via Steve's role on their board and with them to allow us to get investors into the group that normally aren't wholesale, but would be wholesale at a point of time in the future. Another area which has been a really long-term growth area for us is with a Singaporean and Asian-based group called Fraxstore. And we've agreed with them that we will help them establish Fraxstore Australia. And that joint venture is an investment platform. And it's an investment platform that's live that allows people like Primary in retail, but wholesale, to invest smaller amounts of money into projects, both in Australia and via the Fraxstore overseas as well. And if we're going to be relevant for Hong Kong, Singapore, in the offices that SMATS have, we also need to find more interesting and innovative ways to be able to get clients to invest capital in a simple and easy way. And the Fraxstore structure has been very successful, and to be able to set it up in Australia is a very exciting opportunity for us, but just a small part of our ability to be able to deliver to investors, the ability to invest into property and other opportunities that both Griffin, SMATS and GPS see as well. We have for some time been licensed to a group called Odyssey, which is based out of Singapore, Hong Kong and Japan. And we are able to sell our products into other markets, but we're not able to market our products in other areas without the use of the Odyssey license. And that has started to gather some momentum, although in short term, it's a rather expensive capital cost, but in the medium to long term, Australia looks extremely attractive to Asian countries and particularly to Hong Kong and Singapore. And for those of you who aren't aware, Australia's largest investor last year was Singapore into Australian capital markets. So we need to allow ourselves to be able to bring that capital in and to use it innovatively in the Australian market. Thanks, Steve. The other areas that we have focused on, and you'll note that for us, it's always around our product, our offering and our clients, a little similar to SMATS, but we only do one thing. And we're a little different to Steve, who has a broad range of wealth offerings for his clients. We are just solely based around finding a perfect asset, allowing clients to invest in first mortgage, secure private lending, equity or pref equity. So family offices have been part of that growth for us. And over the last 12 months, a broad range of family offices in Australia and in Asia have found our projects to be of interest to them, particularly in the first mortgage and the equity side of the marketplace as well. And to that end, we probably have satisfied ourselves that we have more than sufficient groups to work on. And like SMATS, we're not trying to be everything to everybody. We just want to find groups that find what we do and find what the groups do together as being an attractive place for them to invest their capital. Clearly, we're expanding as we have done with our projects, having projects in Brisbane, Sydney, Melbourne and Adelaide outside of Perth, and supporting our business development teams and our project management teams in each of those states for our projects, and have put together, I think, 6 or 7 now, great people who work under our umbrella to help us ensure that we deliver the absolute best outcome for our projects on the East Coast as well. Of course, not just the projects, but of course, finding new projects as well. And that has been a strategic part of our business. And if you have a moment sometime to have a look at our projects on the East Coast through Brisbane, Sydney, Melbourne and Adelaide, they are an exceptional group of project offerings that have only really come by us having a good team of professionals in the property space to help us do that. We clearly have always seen markets like today, when the market is in what I would call a counter-cyclical environment, when the market looks to be a little negative, therein provides us with the opportunity to buy great assets. And I would have to say we have been provided over the last 3 months with way more opportunities than in the last 12 months. But that doesn't mean they're good opportunities. It just means that more and more opportunities deliver us the chance to find better and better locations and sites for our clients and our investors and our first mortgage providers. One of the new areas that we have been exploring with 2 of our projects is in the area of National Disability Insurance Scheme. I won't go into it at depth today. Steve and I touched on it earlier. There have been people involved in this that haven't delivered a good outcome, but it is a fabulous area of delivery of great quality outcome for the disabled marketplace, that if you do it properly, do it professionally and do it for the right reasons, can deliver great outcomes to our investors. It can deliver great outcomes to people who have some form of disability, and it will deliver a return in excess of traditional residential, but somewhere between residential and commercial rates of return, and great yields as well on that basis. And we are also exploring with other strategic partners at least 2 more opportunities in that market. So Griffin is in property. Griffin is in the business of finding people who want to join us in property. But in the end, it's all about delivering value to those clients. And to do that, you need capital, you need time, and you need the patience to be able to find the right outcomes. So that's why we work closely with the SMATS group. That's why GPS was interesting. and was a great way for us to be able to grow and develop side by side with SMATS. But more importantly, each of the areas Steve's touched on and the areas I'm touching on create more and more interesting opportunities that allow us to think wider, bigger, and that's really what this is all about. So thanks, Steve. That's what Griffin is working on at the moment, and more capital allows us to keep doing what we do better and in a better way.
Well, thanks, Greg. I mean, you know, and hopefully that's given everyone a good insight on what we are. But I suppose in summation, what we've been able to achieve with the GPS convertible note is we've been able to say, okay, rather than the uncertainty of return for everybody that's going to come and get involved, we've given you a certain level of return, so you know that you are going to get that 20% per annum. We've given you, I think, the excitement of joining with an incredible group of people on both sides of the fence and the others that we deal with, that can create an opportunity that I think is equal to or better than anyone else I've spoke to. And I think we've got great stability. And I think the fact that we've been going as long as we have, with the permanent presence that we have, with the consistency that we have, with the wonderful client bases that we have, really is the thing that sets us apart from everybody else. We're not trying to be gimmicky. We're not trying to come in and be the new kid on the block with some sort of weird stuff. This is bread and butter stuff that we do. It's life-changing stuff that we do. And, and it's what we want to keep doing for a long, long, long time. So, we're creating that incredible longevity, incredible stability, and incredible opportunity for all. So, look forward to welcoming you all on board. Look forward to being your employee. And I'll throw it back to Julie, who'll help you with your questions and stuff. But thanks very much for your time and attention.
Thank you so much, guys. That was really interesting, and I'm excited about the future of SMATS and Griffin Group as well as an employee. So before we do get started on the questions, if you do want further information about the convertible note, you can email convertible-note@smats.net, which is on the screen, or you can visit the website, which is smats.net/convertible-note, and Dave and Glenn will be in contact with you. All right, guys, you ready for your first question? Awesome. What is the director's intention for GPS post-conversion of the con notes to shares in GPS?
The whole point of the conversion is to get us ready for listing. So, we recognize that, I think for all parties involved, shareholders, staff, and clients, that we need to create an environment of growth and liquidity, and hence why the stock market is the most sensible. We want to be bigger, than we can do as individuals. So, that stock market listing is there to continue that growth span, and it'll just create even more opportunity, I believe, and, give us a stronger foothold, and, just keep building on what we've done. So the mission is to get listed, and that's going to give us access to even more capital, but also provide our shareholders valuable liquidity and a reference point of value. And that's a critical element too. So we don't want people to be trapped in the organisation not having the choice of getting out, but we also want to be able to be visible and seen and significant.
Next question, as an investor, how much as a percentage will I own in GPS?
So once we get to that conversion event, as you might recall in the part of my webinar tonight, I mentioned that SMATS and Griffin will be independently valued. At the same time, they're using funds from the convertible note to grow their own businesses. So when we get to that point where GPS converts, all the shareholders that make that election to convert will be issued shares plus bonus shares in GPS. Griffin and SMATS will be independently valued. The value of that, less the money they've borrowed, will also be converted to shares. So at this point in time, we can't tell you exactly how much you'll own, because it is a point in time where those three parties come together and all have a shareholding under the one entity. But you can be assured that you will get your absolute number of shares issued for the amount you invest, plus the bonus shares depending on the time you hold. And that, combined with the other investors, will have a pretty strategic, significant holding in the groups, knowing that these two groups are going to grow and continue to grow and have valuable assets that they're going to use to grow their businesses as well. That will all be part of GPS Strategic as well. So we've always felt that bringing the two groups together, it was very much a 1 + 1 equals significantly more than 2. So 1 + 1 will have greater value than being single entities on their own.
All right, so I've heard the convertible note already has a few investors, but you're officially launching now. What was the reason for the delay?
A couple of things. It was basically just use of money. We obviously don't want to raise money just for the sake of it, because there is a cost, and we want to make sure that it's got something to do. And we've also just been, super flat out. COVID didn't sort of help in the organisation, but we literally just been looking for the right projects. We've been able to self-fund everything up till now, so it wasn't a case that we were desperate for the money, and we've just been able to do it at a pace. Now, one of my favourite sayings: "There's never been a rush to make a mistake." So we always, try and do things in a sensible way. It's not just about growth for the sake of growth. It's about growth that makes sense and is going to, work for all of us together. Because at the end of the day, we have a cost and commitment on that money, and we have to make sure that it's put to good use and has, good choices. So we're patient. We're not in a rush. We're not urgent. It's a patient, sensible move forward rather than an urgency.
If there is a trade of sale of GPS and I elect to convert to shares, are my shares liquid? And how would I be able to sell my shares in the future?
Obviously, if there's a conversion event, it's most likely that we'll be on the stock market. So if you imagine, probably the two key, conversion events would be someone buys the entity, buys us all up, or we list. If we list, you obviously have full liquidity, and if we get bought, you get bought out too. So we'd come and say, "Hey guys, congratulations! Look, we're all in this joy together, I suppose." But I can tell you that, from my personal point of view, the likelihood of us, on the SMATS side, accepting an offer to walk away is extremely low. And this is one of the reasons why I'm obsessed with going on the stock market, because it lets us, have a lifetime organization, multi-generational organization, without everybody being trapped into being committed for that time. By being on the stock market, you're liquid. But I can tell you for fact that one of the biggest disappointing times of my entire, professional career was when I sold my accounting practice, way back in 1993, before I started SMATS. And it was heart-wrenching for me. I mean, I sold it. I for personal reasons, I wanted to leave the town. But, it was, really, really hard to say to people, "Oh, thanks for being my client and my friend for all these years. I've just got some money and I'm disappearing into the sunset." And I hated that, and I vowed that I would never do it again. And hence why it's never been of interest to me to have SMATS for sale. But to have it listed so that it has perpetuity, it has, again, liquidity and freedom, that's why I want to do it. I want to do all the big things that we're capable of doing, but I do not want to abandon people ever again. So I can tell you from a personal side, that's unlikely.
Given the importance of the people in both organisations, how do you ensure the longevity of these people with their unique skill sets? And would this include the principles of SMATS and Griffin, i.e. Steve and Greg?
I think Steve's earlier comments in relationship to what we both want is very clear from the way we've gone about doing this and the time to put into it. I think if you just look at the 4 slides between Griffin and SMATS of what we've achieved in a very short period of time with a small amount of capital, let alone new capital coming in, allows us to bring other people along on the journey. And Steve and I, but Steve particularly, wanted to create what we called a super group. And a super group is simply other people like us that can help us get together to be able to be relevant to somebody, whichever the outcome is, come 2 or 3 years down the track. So I don't think either of the groups have ever thought about selling out to somebody else. It was to make us relevant for the growth opportunity that's there right now and to look better over the next 12 or 18 months. So hence in Griffin, I can talk very much around the quality of people we've got, the way we've gone about it, the time and effort we've put into training and being relevant to our clients. And I know SMATS is exactly the same. So like Steve, Griffin is not doing this to take a check at the end. It's to build a strong long-term business for our clients, our staff, and more importantly, to give everyone an ability to get a better outcome.
from my point of view, what I can do, one of my philosophies, and I've been, even though I'm incredibly inactive these days, I used to be highly active in sport at a younger time, and I've done a lot of coaching and stuff. And my mission always, whenever I played any sport, I don't know where I got it from. It just was the way I thought. But I always wanted to be the worst player on the team, and I wanted to be that because I knew I was pretty damn good. And if I was the worst player on the team, we had an exceptional talent and an exceptional team, and we had success. And I carry that into my business. I try and help people become better, and I want them to be better than me, because let me tell you, I've got a lot of failings. I've got a heap of failings. I might have a lot of talent on some things, but you don't want to know all the things that I don't do that well. So I'm always trying to find people that do better than me, not just for the sake of, having them, but the organization is 100 strong on SMATS side, and I know it's growing rapidly on Griffin. It's not about me. I mean, even Ravin's far more important than me, but also it's, I think I technically retired 5 years ago, but I do call myself the world's worst retiree because I can't seem to give up. But my definition of retiree is doing what you want to do, not what you have to do. And it's one of the reasons why I'm obsessed with technology, because that technology means that we can do a lot more things a lot more efficiently than ever before. So the burden and stress on me is not the same. But we've all got use by dates, but I'm keen to hang around. I just keep telling my staff, as long as I'm not doing all the heavy lifting, I'll hang around. And as long as people think that I've got something to offer, I'll be there. But I tell you, I'm going to be the worst player on the team for a long time. So let's make sure we've got a damn good team.
And I can certainly attest, whenever the Griffin and SMATS groups catch up, we are truly like a family. We all genuinely care for each other, and we really do get along. Most of us have been here for decades, sadly. We're going to end on this last question. So is GPS intending to leverage off currently owned assets, for example, owned offices, as Steve mentioned during the presentation, to raise equity through traditional markets rather than wholesale investors?
Well, obviously, like when we buy the offices, the only debt that, again, if you want to know business philosophy, the only debt that I ever entertain in SMATS is debt for asset acquisition, i.e. property. So we have a loan on that we pay down, but that's the only debt. We don't fund working capital out of debt. That would be disastrous, and the convertible note is not there to do it. Now, obviously, it's prudent for us, for instance, when we do acquire an office, if we can borrow 50, 60, 70% at 3, 4, 5, 6% interest, that's a lot more sensible than using 20% cost of capital through the convertible note. So the great thing is that with the convertible note, and the GPS and the SMATS and everything, we're not looking to sell a bit of the business. It's an all-in environment. We built these businesses so that they go forward in their entirety, and hence why we want to be protective of who are the shareholders. I don't want Gordon Gekko to come up and go, oh, let's start slicing it to pieces. We'll make more money by doing that. So that's why I'm obsessed with having our clients as the shareholders, because if Gordon Gekko rocks up, tell him to piss off. It's not for sale. It's not for being broken up. It's for expansion and growth and for the benefit of all clients and shareholders. So I'm obsessed with this sort of stuff. And if you ever get me with a glass of wine, you'll find that it gets even more impressive than that. But this is about the entirety. This is not selling the best bits and or keeping the best bits and selling the others. It's let's do it in full. We're obsessed to do this. We're doing it together. We need your help. We can't achieve what we want to achieve without your help. So we're side by side. Let's do this forward and go make it happen.
All right, let's end on that note. Thank you so much, Stephen, Greg, and Steve, for tonight's presentation. As I said, everybody will receive a copy of this webinar, but if you do have any questions, please feel free to email us, or you can drop us an inquiry on our website. On that note, we will end. Thank you for your attendance.
Thanks,
Bye.
Jules. Thanks, guys. Thanks, everybody.
Thank you very much. Bye.